with us last time as well at Sohn conference. Ramesh, good afternoon. Good to have you here once again, and jam-packed audience here.
Anuj, thank you. Thank you for having me first. It's always a great occasion to come to IRIS Sohn because almost all the best of the industry come together. Some of the best speakers present their ideas. We get to listen to it, and it goes for a very worthy cause. I think the conference originated in Wall Street, but now it's spreading across the world, and I think it's a great privilege to be a part of it.
Okay, so we've heard a lot of ideas already, Ramesh. The sense you get is that it's a market in which a lot of people think that something is not right, but still this fear of missing out, and you keep buying stocks, and stocks keep hitting higher levels. Do you get a sense that the market is running a bit ahead of itself, or do you think if you got your bottom of stocks right, you will still make money?
I am also nervous, Anuj, as you are suggesting. The easy answer, of course, is to keep your high-quality stocks, not trade them because you're nervous right now. But the two things that make me uncomfortable in the market is that while the Nifty or the Sensex keeps making new highs, the undertone or the breadth of the market has turned sharply negative, which is never a good sign. It means at least some sort of intermediate top is in place, perhaps. Secondly, Bank Nifty has made a new high a few weeks ago, but individual component companies are not being able to repay the debt. So that's the flip side of a banking crisis. So I'm not bearish, but I'm more watchful. I think a lot of people will agree with me that there's some froth in the valuations, and some stocks, maybe in the mid-cap sector, have run ahead of the fundamentals. So I'm usually 99% invested. Maybe I'm now 95% invested.
Reluctant buyer you are right now.
Sir, there is a reason you have been called the Nawab of Dalal Street. Same time last year you said, markets will climb the wall of worry. It has. Markets are at new high. From here, you think, we are in a safe zone in the sense markets will continue to go up?
I don't know what during the next 3 months or 6 months. I think the world is becoming a very complicated. Over 12 to 18 months, I'm optimistic. I see no reason to think that the market will correct more than, say, 10%. There's no indications that I'm getting, no technical factors. None of the companies that I talk to are suggesting that they have weak earnings 1 year down the road. I think we're just going through a very tricky passage domestically thanks to GST and frothy valuations. Globally thanks to Brexit, British election, what Donald Trump is doing. So we're just going through a period of slight uncertainty, I would say.
You've been a big believer of buying quality companies. I know a lot of your quality stocks have already done 10x, 12x from what you've bought. Are you now getting enough opportunities to buy good companies at good price?
I am, to be honest, Nimesh, I am. The two sectors that we played out over the last couple of years, in terms of new ideas, one has been in cyber security, but that hasn't worked out, to be honest with you. The shares there are still underperforming, despite the ad that we said came out with WannaCry, that everyone woke up one day to realize the frightening details of what happens when cybersecurity hits you. So I think the theme will play out. The other theme that I've been mulling over the last few years is that this move from unorganized to organized, move to value, move to a mass market. I think we're trying to find an expression of that in the quick service restaurant business, because we think there's a market that's waiting to explode as more women work, as it's more convenient to eat out, as it's cheaper to eat out. I think that industry is propelled for, as Ramdev said in his presentation today, heady growth over the next 3, 5, 10 years. So we're looking at that space in terms of a new idea.
Talking about organized play, I take your point. Titan today is up some 15 or 16%.
Had a great day, yeah.
Phenomenal. And once again, just re-emphasizes that if you buy good stocks at lower levels, you make money. But is this a space, gems and jewelry, which can be part of this organized space? The listed players getting more and more business and moving on from here.
I think that anything organized will do well, as opposed to unorganized, because the unorganized now competes on the same level ceiling or level floor as the organized players. So they will have to, up their game, if you will. So the organized players like Titan will do well. And this jewelry market is not going to go away. I mean, Indians love jewelry for weddings, for, births, for so many other occasions in their lives. So I think we want to look at that huge value golden mean. We want to find out things that are moving from unorganized to organized, delivering value. For example, what I talked about in the quick service restaurant business, you get air conditioner, you get to sit down, you get Wi-Fi available, you get cheap food, and all friends can get together and have there. And basically, we will not be wanting to eat on the roadside stall as much because you want the comfort of sitting down, AC, whatever. So I think a big move going on there.
But in that space, do you move outside of Jubilant Foodworks, the kind of story which played out and now the stock is re-rating? Are there enough stories which are available?
There are a few. They're not enough, clearly. I think India is such a vast country, and you go back and say there are 15,000 McDonald's, 25,000 Starbucks in America. There are comparatively very few of these chains in India and very few in numbers. But typically, here's the question that I'm often asked, as Warren Buffett would. Suppose you were leaving for a trip around the world for 10 years and you weren't going to be able to change the stock. What stock would you invest in? My sense is that quick service offers those kind of answers because the business is going to grow. There's no technological threat to that business. The opportunity size is great, and as long as management executes and delivers, I think these businesses will compound over time and in turn reward the shareholders. So clearly don't look at it for a quarter or for 6 months. But look at over a period of 2 years, 5 years, 10 years. I think these stocks will become, over time, behemoths. Because, Indians love to eat and we love to eat out and we love variety. So we are heading to that sweet spot, I think.
Correct. So one thing that you've been very bullish on for the last many years was the logistics space. Now that the GST is finally coming in place, it's likely to implement from July 1st. Do you think now that's the time now for sector to watch out for? Because you'll see a seamless movement of goods and services?
That was a promise by which we bought the logistics stocks. So I'm not sure I'm buying them now. But market factors this in. All these stocks have had a fabulous run out there. But having said that, yes, there's enough opportunity. And people don't understand what a seamless market means, what central warehousing means, what free movement of goods means. In the next 6 months, I think due to GST, there'll be a lot of dislocation. I think a lot of companies will have very volatile earnings this quarter and the next quarter because of GST and also depending from where it's going. But after that, it will revolutionize, one India, one market type of theory. So clearly, logistics company will do well. But some part of it is now factored into those prices.